This is PCAF Texas Entrepreneurs Playbook. I'm Russ Capper, this week's guest host, and I'm coming to you from the Gulf Coast Regional Family Forum. And my guests, Chris Dannen and Brandon Buchanan, co-founders of Iterative Capital. Chris, Brandon, welcome to the show.
Thank you.
Thanks for having us.
Tell us about Iterative Capital.
So Iterative is a large-scale cryptocurrency miner, investment manager, and private digital exchange.
Okay, that's three separate categories, right?
It is, yeah. We do pretty much every line of business you can do in cryptocurrency.
Okay, so let's say we've got somebody that's not way up to date on cryptocurrency. Explain a little bit more about the three categories.
Sure. I guess we'll start with mining. So mining is foundational to the network. These are essentially peer-to-peer financial networks where people can send payments back and forth, a lot like Fedwire or Swift. Miners are the entities in the network that validate and process transactions. Okay. So that's like being a network owner, so to speak.
Okay.
Yeah. And I guess, the other sides of our business, we are also investors as well, both on the venture capital side and then also on the hedge fund side. So when we originated in 2016, we started off as venture capital investors. We made seed stage investments in blockchain-focused companies. We eventually evolved to doing token offerings, and now, which is very specific proof-of-work networks that we trade in. So as Chris said, we have the full stack. We go from mining to trading, and also have a liquidity provider as our digital asset exchange, where we have outside clients who seek to buy and sell cryptocurrency through us.
Okay. Now, in the mining category, do you actually do mining, or do you just invest in mining companies?
We actually do the mining.
We actually mine. Yeah.
Good.
We bought the mining hardware. Chris and this gentleman by the name of Dannen at our data center, they've come up with our own internal software to be able to mine different cryptocurrencies. And we don't participate in, there are mining pools out there that people could just contribute money and receive back tokens, but we actually do the dirty work.
Okay. Yeah. When people are mining cryptocurrencies, are they mining Bitcoin and Ether or multiple different cryptocurrencies, or do you specialize?
We specialize. It really depends on your fundamental view of the networks and what hardware you have at your disposal. So Bitcoin mining is done with specialized hardware that you have to buy from a select number of companies in China. Ethereum and some of the other proof-of-work networks that are ASIC resistant, they're resistant to specialized hardware, can be mined with off-the-shelf computer components. We started as GPU miners because it gives us more flexibility. At this point, we've invested in ASICs, so now we're doing almost all the networks that are worth anything, we're mining.
Okay. And the mining process itself, I think everybody's getting a picture that it's a room full of servers that are working around the clock, and they're actually working to find specific sequences of numbers and actually alpha characters that have been originally formed to represent cryptocurrencies. Is that accurate?
For the most part. So
Okay.
What's actually happening is the network is always trying to agree upon an order of transactions in a given 10-minute period. A 10-minute period is a block. So sort of the way a day is a block of time in the traditional banking system, we deal in days, you deal in 10-minute blocks in Bitcoin. Okay. So the idea is that the network is coming to consensus about what is the order of transactions, and by extension, what is everybody's balance, because these two things are interrelated. So essentially, mining is a process where the computers that all agree about the truth compete to essentially randomly win a prize. So if you're within the subset that gets the order of transactions correct as a machine, which is not guaranteed, because if you're very far flung in location, you might hear about transactions out of order owing to just network latency, physical distance. So once the majority of the network has coalesced around an order of transactions for that 10-minute period, the machines that got the order right essentially just start guessing. And what they're guessing is they're looking for what we call a block header, which is essentially a hash of all the transactions in that block. But the block header has to have certain sort of arbitrary qualifications. A certain number of zeros have to prepend the hash. And what the network does is if the if that number is found, if that hash is found too quickly, it adds a 0 and it says, okay, now you have to find 10 zeros plus the hash. And that just makes it slower. The point of all this, if it seems kind of obscure, is to regularize the network around this 10-minute block time. No matter how much computing power is being thrown at that problem, it needs to always be 10 minutes. Okay. And so that's what's happening.
Okay. And so when you get one, what happens? I mean, does just a digit go up by 1, or do bells go off, or what?
You get 12.5 Bitcoins as of today.
And is somebody sitting there watching a counter and knowing that you got it, or you just look at the end of the day?
Well, actually, the way that people have set up mining is a lot like office lottery pools. Brandon made reference to mining pools. So the way that everybody mines now is to join a pool, essentially, or to start a pool. And so you get, when a reward is achieved, it's split out among the people that bought the tickets. So in practice, you get regular small payments that you share with people in your pool.
Okay. I understand and hear a lot these days that, it's not an inexpensive endeavor. You can't do it with your home PC or anything like that. We already mentioned, rooms full of servers. It can be fairly expensive, right?
It can, yeah.
Okay. And I heard you even in a talk recently that you just gave the estimated cost. What is that today?
In the U.S., it's about $5,800 last I checked to produce a Bitcoin, and that's just averaging out kind of North American electricity prices. Right. Higher in some places, lower in others.
Right.
And that's if you can actually get your hands on these things.
On the machines,
so there's great difficulty, even getting GPUs or ASIC miners, and so you've seen this represented in the price of AMD and NVIDIA and other folks that have these GPU graphics cards.
Yeah.
Yep.
It's a challenge to get it large scale.
All right, so people watching are probably thinking, man, these guys know what they're talking about too. I think it's real interesting to share your backgrounds. Brandon, share yours first.
Yeah, sure. So I come from a traditional finance and legal background. I started my career as a securities lawyer at WilmerHale. I was doing broker-dealer regulation, white-collar criminal law and securities law. From there, I sort of pivoted. I always wanted to do venture capital. I came along when it was sort of peak of the economic downturn. So that's even how I sort of stumbled into securities law when I wanted to be a corporate lawyer or a banker. So I switched and I was doing M&A banking at Credit Suisse for about 1.5 years, which is around the time that we met in 2012. And then from there, you can see sort of a straight line trajectory towards me and venture capital. So I went to Gunderson Detmer. I was a venture capital lawyer doing fund formation, venture financing, corporate governance for all sorts of startups, primarily in New York. So I touched on Union Square Ventures, FirstMark Capital, Tiger Global, BetaWorks, a lot of the big companies that came out, part of the team that sold Tumblr to Yahoo. From there, I joined Metamorphic Ventures. I was the chief operating officer and general counsel there. And then at the end of 2015, we both left our respective venture capital jobs and started Iterative Capital. So throughout 2016, we were sort of on the road trying to raise capital for this first fund. Incredibly challenging at that time. No one had really heard about blockchain. Cryptocurrency was really this sort of, not an underground thing, but really only developers and engineers were talking about it. Investors certainly weren't putting money into tokens. So raising capital was a challenge, but at the end of 2016, we closed a small amount. 2017 was a huge success, and I think now, you've seen us build out the full stack of what our platform is. We've added employees, we've added offices, and it's really been exciting.
Wow, and you office in Los Angeles now.
I am opening the office in LA. I just moved there in November. I'm still back and forth bi-coastal with the guys in New York, but we actually did just get an office in LA off Comey Avenue. With an investor of ours who's one of the best architects in the world, actually, and I think top 10 in the United States, called MRAD Architecture. So we partnered with them. You can imagine the facility looks fantastic and it's a great place to work. But yeah, we'll hopefully be expanding into London by the end of this year. We certainly have an advisor out there. We have plans to be out there, but we'll continue growing and scaling.
Quite a story. And Chris, you're in New York, and
Yes.
share your background.
So I'm from New York originally. As Brandon mentioned, we were both working in venture capital when we decided to launch our own fund. I was at a fund called Undercurrent Ventures, which was a two-headed beast. There was a consulting company whose primary clients were mega corporations like Pepsi and Amex and GE, BlackRock, GE Capital, and then it had a $20 million venture fund. And what we used to do was essentially look at the problems that we were seeing. This is my summary, at least. What we used to do is look at the problems we were seeing in the enterprise clients and then fund companies that were solving those problems on the venture side. So there was a lot of back and forth, and I realized that I liked the venture stuff much more than the consulting stuff because I could see my ideas actually take off. And in consulting, it's rare that your client actually listens to you. So
Right.
prior to that, I had been a journalist. I was the senior technical editor at Fast Company, and
Wow.
and I had done some management consulting on and off before I took that job, because I really wanted to study sort of the state of the art in technology businesses, and you can't do that by having one full-time job. You really need to be dipping in and out of many different companies. So I did that until I felt like I could be a competent venture capitalist. And by the time, to Brandon's point, by the time we got there, venture capital had become, and I still think of this, it's like a caricature of what it was in the 80s or the 90s or the 2000s. And so I'm glad we made the switch to this world.
Okay. Let's get into blockchain a little bit, and then I want you guys to make some predictions for the futures. But blockchain's a key part of everything in cryptocurrencies. I mean, it enables it to work, to trade, to be protected, and also it is starting to be used in other categories other than trading cryptocurrency, correct?
That's true, although it's nascent. Yeah.
Okay.
Yeah, but people are figuring out the fundamental mechanism in Bitcoin is this trustless ledger, and people are figuring out other things they can put into trustless ledgers that could be useful. I think title deed is probably one of the easiest low-hanging fruits, but with these things, there has to be a blockchain that everyone considers canonical before you would ever, build such foundational public services on it. So I don't think we're at the phase yet where we know which blockchain is going to be the one, but people are certainly experimenting with what we call private blockchains.
And I guess there are already interim places where you can trade from one cryptocurrency to another. Is that right?
Yep, exchanges.
Why would one want to do that?
Well, mostly to speculate, I think.
Okay.
At this stage.
Because they're in one and they think it's not going up, like instead of
Right.
spending more money in cash. Okay, interesting. Okay, so share your perspective on the future. I know we could talk about this kind of stuff for hours on end, but you guys came together and chose this path because you think this is where it's happening.
So I'm interested in it, to segue from my comment about venture capital, I'm interested in it as the next foundation for growing companies. I don't think that the way the financing pipeline works now is conducive to building products that work. It's conducive to building products that can sell quickly to enterprises or go public quickly. So I think this is going to bring back some spirit of creativity into entrepreneurship, especially in technology.
Wow. And why did you go down this path?
Well, for many of the same reasons. I mean, we thought the way the companies were funded was really highly inefficient, right? I mean, a company that has a great idea to go from seed all the way to IPO process, it's highly inefficient. But I think, for me, the futurist in me wants to see, what Chris was alluding to during the talk about Internet of Things and being able to enable machines or driverless cars and things of that nature, how to really do that. We think cryptocurrencies and the ability to do micropayments on a global, borderless, trustless way, I think there's a lot of promise there, right? So, I think about the movie Minority Report and all these cool things. I hope that we get to a level where blockchain enables a lot of these other things to pop up.
Okay, so are these ICOs that have popped up, is that actually sort of the beginning of it, or do you think that's a little bit risky right now?
I think 98 to 99% of them are worthless or useless, and it's not a knock on any of the teams, but we certainly get emails every day about a new ICO that's happening, and the use case sounds completely ridiculous, or that they're only using it as a mechanism to raise capital. They don't really need to incorporate blockchain or cryptocurrency. So I think what the ICO has shown is a way to raise capital from many disparate people all over the world, and that's what I think the ICO has shown. And I think that's the real innovation there. I don't think it's that these companies are doing anything particularly exciting, although there have been a couple that have come out.
Okay, so before I let you go, say we have somebody watching that's really interested but is just at a very basic level of understanding today. You got any advice on how they could get smarter about cryptocurrency?
Follow our newsletter.
It's a good plug.
Yes, a plug.
And how do they get your newsletter?
They'll go to our website, Iterative.Capital. Top right, click on subscribe. You'll see our team's research from our great head of research, Leo, inputs from Chris, and you'll see sort of daily and weekly news and insights from us. And then we also have a podcast on SoundCloud,
Cool,
where you'll be able to hear directly from the team and folks that we interview. And then also Chris's book.
Yes. Well, so I have a new book coming out. I have an existing book, another plug, I have an existing book introducing Ethereum and Solidity. I have a new book coming out this year that I wrote with my friend Kedar, who's a great engineer. It's called Ethereum Games, and it's all about building casino games on Ethereum with real money.
Okay, Brandon, Chris, thank you guys a whole lot. You bet, you bet. And that wraps up my discussion with Chris Dannen and Brandon Buchanan with Iterative Capital. And this has been a Thought Leader production brought to you by PKF Texas Entrepreneurs Playbook.